What's going on, traders? My name is Paul and welcome back to the channel. We're going to be taking a step back away from trading for a moment and we're going to actually have a discussion regarding OTC markets. Now, as many of you know from all of the videos that we posted here on our channel, we've done numerous sessions trading regular price markets and OTC. And generally speaking, within the binary option industry, there is a wide attraction to trading OTC pairs because in most cases, those assets carry a higher payout. But just because something creates a potential higher payout doesn't necessarily mean that it's ideal to trade. Or is it? So we're going to talk about OTC, specifically discussing the good, the bad, the pros, the cons, the benefits, disadvantages, and potential price manipulations that can occur within these types of markets. That way you have more of an understanding what OTC is, how it works, and then you can decide for yourself if trading OTC is ideal for you. What is OTC? OTC stands for over the counter. These are prices that are set by the brokers themselves. So because they're set by the broker, if you were to look at an OTC pair, it's going to be priced differently compared to looking at a live market price currency pair. And to clarify, a live market priced asset simply means a currency pair priced off of global data. Okay. So again, we have OTC prices that are set by the broker, and then we have live market price assets that are based off of real-time global markets. So to give you an example, if we were to look at Swiss franc versus the Japanese yen, we can see the data received on our broker is exactly the same as the data we see on a third-party chart such as TradingView or MetaTrader, where charts like TradingView and MetaTrader only provide information based off of live market data. So you can see between our broker and our TradingView chart, looking at the same currency pair, we're seeing the same structure, price data, and movement between the broker and our TradingView chart. However, if we were to look at the same currency pair, but this time we're looking at it in OTC format, and we compared that side by side to a live market feed through TradingView, you're going to notice the price, the structure, and the fluctuation are very different. Why? Because what we see here on TradingView is based off of global market data, whereas what we're seeing here on our broker in OTC format, these are prices that are set by the brokers. So it's really important when you're trading binary options, you pay attention to whether or not that asset you're trading or about to trade is formatted in OTC or not. Based off of my experience, one of the main attractions to OTC is, for one, the payouts are higher. I mean, if you were to look at your currency list, you're going to see payouts of up to 92%, which of course is ideal because you want to receive the highest payouts possible, especially for the fact that when it comes to binary option trading in general, you're always going to be putting in a little bit more than what you actually receive in terms of profit returns. But another benefit, in addition to higher payouts, OTC markets are virtually available anytime you want, 24 hours a day, 7 days a week. So when you compare that to regular market hours, which are only available 24 hours a day, 5 days a week, OTC markets not only provide higher payouts, but also more flexibility, which allows you to trade virtually anytime you want, including weekends. Just a few days ago, we posted a video of a trading session that occurred on a Sunday afternoon when markets were closed, which allowed us to earn over $6,400 in profit just for trading 20 minutes on a Sunday. So for someone who's busy throughout the week and only has free time to trade during off hours and weekends, this is where OTC can come into play as a benefit to those who still want to trade the markets during unorthodox times. So while there's some great benefits to trading OTC markets because of their higher payouts and the flexibility provided, which virtually allows you to trade anytime you want 7 days a week, there are also some downsides and disadvantages to trading OTC markets in comparison to trading live market data assets. For one, it comes down to analysis. When you're trading an OTC pair, your ability to analyze OTC priced assets are a little bit more obscured on a broker platform because yes, while you can look at higher time frames, your point of view of the overall market for that asset that's priced in OTC is more limited in comparison to what you would be able to experience if you were trading regular price assets. One of the best tools every binary trader should be using is a third-party charting platform known as TradingView. TradingView allows you to get a much wider view of the price action, structure, and history of whatever currency pair or asset you're trading. This is essential for when you're narrowing down to those smaller time frames when you're trading binary options on a 5-minute, 1 minute, or even a 30-second chart. Not only is technical analysis important for trading binary options, but also being aware of any news events that could potentially affect the currency pairs that you are trading, which is why we pay attention to certain news portals such as forexfactory.com and invested.com. Being aware of these news events helps us understand when certain volatile events are going to affect the markets, which could of course affect the currency pairs we are trading. Here's an example of USD/JPY right before the NFP news was released. This is not manipulation. This is just as a result of a news event that was scheduled to occur, which caused massive volatility for those correlated currency pairs. And as a result, this is why we had this massive move. We knew this was going to happen because of the information provided by economic calendars that tell us, hey, at a certain time, this news event is going to come out, and we can expect that that volatility is about to hit the markets. However, with OTC trading, using economic calendars are not applicable. Why? Because again, OTC markets are prices set by the brokers themselves. They're not typically affected, or I should say necessarily correlated to live market data. So when you're trading OTC markets, some of these spikes, whether to the upside or downside, are going to occur, but there's really no way of telling why these spikes occur in the first place. Now, some people could argue manipulation or just the way that price action works within OTC, but if you were in this region of the market and, at the time, market is trending, relatively upwards, a lot of people are going to be entering buys, and then all of a sudden you have this massive spike, which closes you out at a loss. Vice versa, over here, a lot of sell orders are placed in this region, and then we have a spike to the upside, resulting in you losing in those positions. So in other words, when you're trading live market price currency pairs, you have the ability to use third-party charting solutions like TradingView to conduct a more thorough technical analysis and use economic calendars to know when volatile news events could potentially affect the currency pairs that you're trading. This combination of technical and fundamental analysis helps you mitigate your risk as much as possible when you're trading these markets. Unfortunately, with OTC markets, those types of analysis from a technical and fundamental aspect are not applicable with OTC. As a result, OTC trading does carry a bit more risk in comparison to trading live market price currency pairs. So you gotta ask yourself, if there's more risk to trading OTC, then why are the payouts higher for OTC trading? Honestly, folks, the reason is quite simple. They want you to trade it. Which leads me to my next point about market manipulation. Now, I want to make perfectly clear, all markets are manipulated. Doesn't matter if you're trading binary, OTC, Forex, crypto, futures, stocks, even the price of gold has been manipulated for over 30 years. So if you're going to enter the trading world or the investing world, you have to understand manipulation is a factor that we all have to accept because that's just the way that this game works. Manipulation comes from entities, from institutions that make these prices go up and down. So whether it's manipulation from the institutions or from the broker setting an OTC price, manipulation is everywhere. Now, on one side, there are many people that would argue OTC markets are manipulated a lot more than regular price markets. And to be honest, folks, there really isn't a full concrete way of measuring that type of manipulation because at the end of the day, OTC is a market and every market can be traded and leveraged to your benefit to make profits. What matters and what makes the difference is whether or not you have a properly rules-based strategy that can give you a statistical advantage over that type of market. Coming back to my example of the Swiss franc versus Japanese yen, this is regular market price data where we can see a level of support in this region. However, you'll notice that price had broken through this level of support, and as a result of that break of support, many people entered sell orders thinking that, oh, okay, well, my support has been broken, price must be going down, let's enter for sell positions. And look what happened. Price ended up shooting back up above that level of support. This is a prime example of market manipulation, and this happens all the time with virtually every single currency pair, all right? And again, we're talking about live market data here, not OTC markets. So the point I'm just trying to make here, folks, is manipulation is everywhere. And yes, I do believe to a certain degree, because OTC markets are set by that specific broker that you're trading on, yes, manipulation can occur more frequently than others. But just because there's manipulation doesn't necessarily mean that it can't be done, because as you've seen from the many videos that we posted here on our channel, we have posted several successful strategies and tutorials that help you navigate not only live market data trading, but also strategies specific to OTC. And of course, for your convenience, I'll leave a couple of links to my preferred strategies for trading OTC and regular markets down below in the video description. But I do hope this video has provided just a little bit more clarity. There are good and bad qualities to any type of trading inside and outside the binary option industry. What you need to figure out is what's ideal for you based off of your schedule and of course your trading style. So whether you want to trade the binary option markets off of live market data or on OTC, Pocket Options is definitely one of the best brokers out there. What I suggest that you do, practice trading live markets and also practice OTC on demo accounts and see which one you prefer. Pocket Options does provide free $50,000 demo accounts which you could use at any time, which you can access down below in the video description. All right, traders, that concludes our video for today. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. I want to thank each and every single one of you for taking the time to watch this video. Hope you enjoyed it, gained some value. And of course, if you want to check out some of our other recent uploads, you can check out any of these videos. And I look forward to seeing you on the next time. Take care.